And yeah, hopefully you all can enjoy and especially know that how to trade smarter with our SGX SICOM rubber futures, because I believe recently we had some inquiries actually regarding on rubber futures, like how people really on trading rubber, and what are the fundamentals news, what kind of factors, what kind of the facts or news can really affect it to our rubber futures. So for this seminar, for this webinar, we will explore it one by one, and you will be understanding on very beginner to start with the rubber futures trading. So before I start with the topic of today, let me introduce myself. My name is Darren. Actually, I'm a dual licensed dealer and also the marketing executive at Phillip Capital Sdn Berhad. Actually, my base is at Kota Damansara. So let's say if you have any questions, you can just feel free, and we welcome for you to walk into my branch to seek for my advisors. And also, actually, my background is from Bachelor of Business Admin from Kuala Lumpur University of Science and Technology. So actually, before that, I'm really passionate in trainings. I mean, how to trade in forex markets and also research, make the market research, everything. So end up, I choose this industry as my company for my job, right? So for today, before we start, and I also will spend another 10 minutes to just have a briefly introductions on our Phillip Capital. So before that, this is just a short disclaimer to all of you that for today's webinar, if it's just purely for educational purpose, in which that I'm not trying to convince you to buy or sell any of the products here. So let's say if you really have some questions and you want to know further informations, you can just seek for your beloved dealer, or maybe you can find some others licensed dealer to ask for more advices. So I'm not trying to convince you, but yep, hopefully you all can enjoy and treat it as a educational channel for today. So for our Phillip Capital, we actually incorporated on 7 October 1995, which is the wholly owned subsidiary of Phillip Capital Holdings Sdn Berhad. And some of you might heard about this before. Actually, we are formerly known as Phillip Futures Sdn Berhad. So in which that in previously we only just offer for futures products, but nowadays we also offer for stocks markets. So that's why we have rebranded our name from Phillip Futures to Phillip Capital. And we also the trading participant of Bursa Malaysia Derivatives Berhad, participating organizations of Bursa Malaysia Securities Berhad, and also the holder of Capital Market Service License. So what does it mean is in which that we offering for our platforms and also offering futures and stock market for you to start tradings. Actually, it's all in the very legal way, in which we are under the supervisions of security commissions. So this is our affiliate office nationwide. So in which that actually our headquarters will be located in KL, and we have totally 11 affiliate investor centers, we so-called the branches across Malaysia, including West and East Malaysia. So you can find us actually from, for example, in Penang, Galasota, or my branch is at Kota Damansara, and also nearby we have Malacca, and then Johor branch, JB branch, Klang, and then Kuantan, KK, Cebu, or even in Kuching. So let's say if you are staying at nearby of these kind of states, so let's say if you have any questions, you want to walk into our branches, you can just feel free to walk in during weekdays. We are happily to assist you if you have any questions. And this is our global network in which that we are not only covering in Malaysia, we're also covering in some other countries. We're totally covering in 15 in 15 countries across the world. So in which that I would say that our company actually is not just a local company, and we also a global company for your references. And also our mother company is from Singapore side. So you can see we are not only covering in Asia countries, we're also covering in some European countries, like for example, United States and United Kingdom. Even in Dubai, you can find our Phillip Capital nationwide, right? So actually this brings for another advantage for us, in which that we are not only just offering for local products for you to trade, for example, local futures like Bursa, and we're also offering some global futures, for example, CME. We so-called CME, for example, like those indexes, and also CBOT, CBOE, and such much more in the US exchanges. And also we have London exchanges, European exchanges, Hong Kong, Japanese, and also Singapore and Australia Securities Exchange for you to trade with us. And to be proud of that, I want to let you all guys know that actually we are the number one Malaysia's top broker, and we won the Bursa Excellence Award 2025, which is on last year. We are the champions and also the first runner-up of the best retail derivatives trading participants and also the best institutional derivatives trading participants. So one-stop solution for your tradings. Maybe you have a questions like what kind of products that we are offering. So actually, we are offering in 3 products we call futures, stocks, and also CFD, contract for differences. So for futures, actually, we have index futures. For example, in Malaysia, what the most famous index futures will be the KLCX index, which is called FKLI. And then we also have, for example, CME. We have the Dow Jones indexes, S&P 500 indexes, and also Nasdaq 100 indexes, and much more. And we're also offering agricultural futures. For example, like in Malaysia, the most famous will be the FCPO, crude palm oil. And also, for example, if you let's say if the American products also have the soybean, wheat, and corn, and much more. And for metal futures, will be, for example, like those Chinese favorite will be like gold futures or maybe silver and also copper futures. And energy futures, we have gasolines and crude oil, which is the recent trend right now. And also we have the natural gases for your references for you to start tradings. And we also have the cryptocurrency futures, for example, like Bitcoin futures, Solana, and also for Ethereum futures for you to start tradings. And for stocks, we're not only offering for Malaysia shares as well, we're also offering another 4 countries, which is called US, Hong Kong, Singapore, and Australia shares. So actually, we can trade with us in 5 countries of the share markets here. And for contract for differences, we're actually offering for 2 countries, which is on Malaysia and also US only. So we have Bursa Share CFD and NYSE Share CFD, Nasdaq Share CFD, and also the US Index CFD that we are offering for this. So let's say if you have any further questions that you want to ask for some of the shares, maybe or CFD, regarding all these kind of questions, then you can just feel free to ask us or ask your beloved dealers in Phillip Capital. Then we will happy to help assist you if you have any question on this. So come up with this. Maybe you have questions like why you should choose our Phillip Capital as your broker. So as mentioned earlier, we are the award-winning multi-asset broker. We have won the champion for last year, and we have a wide array of products for you to start tradings. And most importantly, we're also offering 24-hour blocking execution support. So in which that, let's say, for example, if you trade American, like US markets, right? We all know that US market operates at the midnight, which is in Malaysia hour at midnight, right? So if let's say if you face any problems or any platform issues, or if any questions that you want to ask for the US markets, then you can just feel free to call in to our dealing desk, which is our KL dealing desk. Then we will always have someone to assist you and pick up your call. Even you call in to their numbers, they will assist you if you have any questions on this. And also we will provide advisory services, and also we will send you the latest market news, and also we don't have any platform fees to charge you. So this is one of the special treatment, let's say if you become our clients or not clients, because I would say that our Phillip Capital's our main purpose actually just to educate most of the public, the country, all of the audience here. So let's say you can see how we are oftenly doing seminars or webinars, because we just want to educate more people to understand how to start tradings. So that's why we have one session called free one-to-one coaching. So let's say if you have any questions, you want to ask for the product knowledge, you want to ask for the platform, how to use our platform, or you want to know about charting system, how we look at the markets, how we do the research, everything. You want to ask for the more information, so you can just feel free to schedule a time and ask our licensed dealer in Phillip Capital. Then we will schedule a time together. We can meet either physically or maybe online as well. So this is our weekly market course, and this is also one of the benefits. Let's say if you become our clients, and every Monday, around 11 a.m., which is in the morning, we actually have one Singapore analyst will present on weekly views and updates as well to talk about the the new published reports for some of the counters, some of the shares market. So let's say if you're interested, you can always feel free to join our weekly market course in the morning, and also at the same day at night, which is at 8 p.m. We also have another technical analyst from Singapore. He will discover the weekly trends and also potential entries at asset levels through the technical analysis to tell you what kind of the shares market or maybe some of the products, which is your entry and your asset level for you to trade on it. And this is our upcoming seminars or webinars. So let's say if you are interested, then you want to follow up with our latest seminars or webinars in the future. And mostly our seminars and webinars are free. So let's say if you're interested, I will just leave for 3 seconds here for you to take a screenshot. So maybe in the future, you can scan what is QR and link to our website to follow up with our latest events, seminars, or webinars. All right, I believe you all taken the picture already. So next, which is on the online account opening. So let's say if you have any, if you're interested to open an account with us, you can also take a screenshot from here. And this is the QR for you to open an account with us. And we can do it online as well. So it is very convenient right now. Okay, next. This is our trading platform. It's called Nova. So Nova actually is our in-house platform, and we have multi-asset, products inside for you to start trading with us, in which that we're offering futures, CFDs, and US stocks for you to start trading with us. And also in US stocks, right, we actually offer fractional shares for you to trade in our platform, and we have the trading view chart integrations, in which that if you don't have trading view subscriptions, right, you don't need to pay anything. You just need to open an account with us. You use our Nova, right? You also can access with the trading view chart and the function inside our Nova without paying any subscription fee. And also, don't forget that we don't have platform fee for you as well. And then we also have market depth trading tool for you to start to look at the price ladder. And also we have local and foreign products start trading with together in one platform. And also we provide live market news and also technical views. And also very importantly, we have the Nova AI trading assistant inside. So let's say if you have any questions you want to ask for financial knowledge, you can always ask our Nova AI in our mobile apps. So the AI will assist you and answer your questions. And also, let's say if you're interested, you can scan for this demo account. It will link you to spend some days to understand how the interface look like. So let's spend another 3 seconds for you to take a screenshot. Okay, so for now, for the next page, we also have the live charts powered by TradingView. You can link our Nova in TradingView, in which that this is only, the benefits for those TradingView subscribers, because some of the TradingView subscribers, right, they are familiar with using all the TradingView tools to trade. So actually, one of the benefits is you can link our Nova in TradingView, in which that after that you can use TradingView to directly trade inside TradingView, not using our Nova. It will be linked together, which is the orders will be flowed to our Nova as well. So at the end, you can use TradingView to trade with us. Okay, so this is our promotions, right? So let's say if you're keen to open an account with us, I believe today is the best chance for you because we have the welcome rewards. Let's say if you want to open an account, and then this is our rewards. We have waiver for CDS fee. Let's say if you open the stock account with us, and also let's say if you open futures or maybe stocks account, actually we'll count them by the account one by one. So I won't talk in details about this rewards. Let's say if you are interested and you don't have any account with us, please feel free to ask our beloved dealers, and also you can also get my numbers after that. And then if you're interested, you let me know. Then I will describe for you for this reward. And this reward only applicable for 1 week only, which means that start from today until next Wednesday. Let's say if you want to get this reward, please ask our dealer and please mention that you have joined today webinar, that you want to open an account today for this. All right. Okay, so finally, we are going into our main topic of today, which is the online webinar Trade Smarter with SGX SICOM Rubble Features. So this will be the content outline. So first of all, is why we should trade Rubble, and what is the SGX TSR 20 Rubble Futures contract. And also, I will talk about the correlations between some of other popular commodities futures with Rubble, and also I will teach you how to make use of our SGX website to check on the fact sheets. And also, last but not least, is about the technical analysis and the price outlook for the Rubble futures. So first of all, before we look at the TSR 20 futures like this, the chart pattern over the years, right? We have some questions for today. Actually, we need to understand before what is the history on Rubble futures. And also, you can see when you look at the chart, right, the price actually surged to an extraordinary high, and also followed by one of the most significant declines in the market during 2012 until 2015. So the question is, what actually happened during these periods, right? Why suddenly the price dropped a lot when the market, we start issuing the Rubble futures? And also, we drop one by one. So for example here, actually during 2013 until 2015, which is the major bear markets of rubber futures, because during that time, I mean, actually for the older in older generation, right? Actually, we all know that rubber might be the future trend, because all of the, I mean, I believe if you ask your grandmothers or your grandfather, all most of them actually have trying to become one of the farmer for rubber market, right? They would say that, oh, they have the farm for rubber, they want to um, get more production from it in order to make exportation to other countries, right? So this is one of the major target, not only for Malaysia's, in all other world as well. So during that time, actually, rubber become oversupply because we all doing these productions in rubber. So although we think that it might be a sufficient amount in the future, but actually it will be oversupply situations. It might be cost another. So you can see the second point here, the high rubber prices during 2005 and also 2011. During these periods, we actually have massive plantings with too many plantations during that period. So the trees actually mature and also enter production during these years. And the problem is we have less, I mean, we have lack of the labor here, in which that we can't really keep going with this. So after that, um, when during that period China economic growth is slowing down, then the tire demand actually is slowing down. So that's why the supply is imbalanced with the demand during that period. So that's why after we start issuing the futures market is global, actually at this period the market is start to drop a lot during this period. And the global inventories keep building up, so putting on the pressure on the prices here. So you can see during 2013, right, the consumption, and you can see the consumption here, the main demand actually is only from China. And then the rest of the countries is all planting the rubber. So that's why you can see it cause the imbalance here. Only China demand for more rubber. At the same time, all of the countries in, for example, in Indonesia, Thailand, in Malaysia, and India, all of us are doing this plantation of rubber. So that's why you can see why supply is more than the production is more than the demand. End up oversupply, the price will drop. So when you apply this mindset in your charting, right? Actually, you all of this you need to know about the commodities is about the supply and demand, because, for example, if you're going to a pasar, for example, you want to buy something. If you as a seller, for example, if you as a seller, you want to sell something on it. Let's say if there is no demand, nobody want to buy your products. What is the first thing you will do? You will decrease your prices. So that's why during that time, demand is not high for rubber, and then the seller will decrease the prices. So that's why end up the price is keep dropping. You can see the price is keep declining because you want to get it cheaper, then you can attract the buyers to buy the rubber. So actually, it's same mindset if you want to, if you think like the seller perspective, right? So for the year of 2016, it is the price recovery because during that time, as mentioned, we actually have lack of labor during that period. So actually, the production is slowing down during this period. And then you can see in Thailand, Indonesia, and Malaysia agree to cut the rubber exports by approximately 615,000 tons to support the prices. So end up because we cut the exports, the productions, I mean the supply is limited. So that's why end up we can get it balanced from the supply and demand. And then the farmer, you can see, tends to reduce the tapping and abandon some plantations here. And one of the most important thing later I will talk about is about the Indonesia, because Indonesia used to be one of the best productions in rubber, but end up they trying to shift their productions to palm oil instead of rubber. Later I will explain why. And then during that period also, we have some cold weather issues supported. So it's delaying the tapping and reduce supply. So less tapping, meaning that less productions. So that's why the supply is keep decreasing during that period. And the Chinese commodity markets attracted speculative buying. And during that period, Chinese actually, I mean, the China market, they still need a lot of tire demand. So that's why they still be our best. I mean, the top one, the top one demand of the countries from here. And also we have the rising oil prices increases for the synthetic rubber cost, making the natural rubber become more attractive. This synthetic rubber actually is one of the uh, rubber affected by crude oil because it's blended by crude oil. So end up there's a relationship between the crude oil and synthetic rubber and also the natural rubber, then you will be understanding why this affected the market going up. Let's say if the crude oil prices is increasing for the natural rubber, because if the crude oil prices is increasing, synthetic rubber cost will be higher. So when it become higher, as a buyers, right, what you will do, you will shift your demand to another, we sell it the another products to replace it, right? Because you want to get something cheaper. So natural rubber become the cheaper compared to synthetic rubber. So end up the buyers, they shift the demand to rubber, natural rubber, which is the TSR20 futures. So end up you can see the price is going up because the demand is getting higher and then the supply is getting lower during this period. And at the year of 2017 to 2023, it will be the long consolidation year until today. You can see the long consolidations, the prices is keep up and down during this range. And then the price move mainly with a broad range, and also the supply and demand become more balances. And then there is no major structural shortage and also the oversupply like the previously. And then also the market trader sideways lah, because we need to wait another new catalyst right now. So during year 2024 until this year 2026, is it the new bullish trend? Because if you look at the chart, right, we can see that the prices actually is really um, near. I mean, it's actually hit to the previous high during 2017, which is the main um, resistance here. So we can targeting and also try to see whether the price is another new bullish trend. Then we will start analyze it one by one. And then because we have the aging plantations and insufficient replanting, mean that actually in the fundamental side we have limited our production growth. But at the same time, the demand is still high because we have the heavy automotive and tire sectors, especially still in China and India. China is still the main um, demand from the tire industry here, because we all know that over these years, right, China is the one of the countries which is aggressively keep increasing in their automotive cars. So in which that you can see that why they keep having this kind of demands from the past until today. So there will be the overview for today. SGX TSR20 futures, because if you, let's say, if you dig into this rubber futures market, you can see that actually we have two types of rubber, which is called rib smoke sheets, and also another one is called technically specified rubber. So mainly we are we are looking at TSR rubber because in RSS, right, the main differences actually this is from the latex sheets, which is smoke and air dry, and traditionally form of a rubber productions here. So which means that actually this is mainly for our paper use. But nowadays, currently you can see we are more in electronic way, in which means that all of these things we can do it by email, for example, everything in electronic way. So in which that paper is not the main demand for nowadays trend. So that's why people actually, for those buyers, they actually tend to buy more in TSR instead of the RSS, because TSR is made for processed rubber crumbs, in which that this is standardized blocks, and also for the mass manufacturing of lab testing. So let's say if you want to make for tire or everything, right? Basically, TSR is the main products that we need to make for processings for tire or whatever products here. And it is more easy compared to RSS if you want to make some more processing in the lab testing or in the manufacturing, in the manufacturer factory. So you can see here, actually TSR actually we represent have 75% of global natural rubber productions here. And then there's the surge of the automotive industry push for another demand recovery. So you can see in China, right, from the year 2019, actually they have the analysts from Elastex, they have forecasting about the China automotive industry markets. So from 2019, actually they have increased a lot during that period. Actually, they want to sell for their EV cars. So during that time, we can expecting that the price actually will keep increasing until 2035. So you can see that this is the which our China is the world's largest electric vehicle market. So 2024 we hit the highest in at 350 here. You can see the 350 USD billion in USD. So you can see this is the highest amount that we have hit for China automotive industry market. So end up you can forecasting that their demand will be keep increasing more and more in the very near future. And then they actually need more tires because they of their EV cars and their hybrid cars. So you can see during 2026, like for this year, automotive industry in China still hold for the number one spot. So that's why we can see this analysis for this analysis for China automotive in the very near future. We can see this is a valid figure because compared to all other countries, we all cannot. I mean, we all cannot fight with China. They still holding for the first place, especially in the automotive industry. So that's why they still need a lot of demands in rubber, especially for tire manufacturing. So one of the good things you must know about why China is have the number one automotive industry in compared to all other worlds because first of all they have the growing middle class populations, so they have actually risen their disposable incomes, continue to increase the vehicle ownerships and also support the long-term tire demand from the past until today. So why they want to do this? Because you can see the fourth point here is about environmental concerns and sustainability. So for this kind of matters, right? Actually, they want to make the shift from um, from the oil car to the EV car because they want to make it become more cleaner transportations, and also it is supporting by the growth from the EV car and hybrid car in order to make it more green to the country itself. So actually, like for example, in we sell it in crop palm oil, right? We're all doing the biodiesel because of what? Because we want to make it green for our environment. Because if we just only use the crude oil as for your main um, products, I mean, for petrol, for example, everything's here. Not only this is non-renewable energy, but it will also cause some pollutions in the air. So that's why end up not only in China, all of the countries actually they are trying to make it become more green to the world. So in especially in China, we have the higher populations, right? Of course, this is one of the concerns. They want to make it green for China country. In so that's why end up they push a lot for the China automotive industry. And also we have the government policies and incentives. So actually for China, right, they have the strong government support for EVs, and also the automotive development continues to drive the vehicle sales growth. So maybe they give some incentives for those company. Let's say if they build for more EV car, they can give more incentives for them. Maybe the tax cut for them to support the growth in the demand here. I mean, in the automotive industry here. And also we have the expansions of charging infrastructure. So China have the extensions EV charging network is is actually one of the good thing is um, um, they actually before building this automotive industry, they built all these stations across the country first before we do it for the EV car. Because let's say if you only build for EV car, but we actually have lack of this kind of electronic stations, right? Then actually there is no point for the EV cars, right? Because you don't have sufficient stations for you to charge. Maybe you want to go to another state, but you don't have the station for you to charge an EV car. Then how come? I mean, this will be the concern for our people, right? Because we think that there's not sufficient for us to charge our car. Then why should we buy EV car instead, right? Because we don't have the reason to buy it. That's why before they built the EV car, they first is built the stations across in China before they build the the EV cars here. So that's why you can see China have increasing, I mean, very quickly and also very efficiently to increase the automotive industry. And also because of the technological advancement in manufacturing, so they have a smart manufacturing and automations are also improving their production efficiency and also expanding out the automotive output here. So as you can see for 2026 year, this is our major rubber productions by the country. So you can see actually Thailand, Indonesia, Vietnam, and Ivory Coast. Actually, we have all these countries are product things for our rubber and keep on for the export to other countries to make more productions to support the demand. So this is all the countries that we should look at, and why we should look at all these kind of countries because whenever they have any weather issue or whatever, it might be causing their, I mean, it will be maybe to affect to their productions as well. So whenever the production is being affected, the supply will be affected. And up actually it will causing the price whether it's going up or down. And also this is the very significant news that you should look at because Indonesia rubber Grover bets the farm on oil palm. This is one of the news that you can find from Reuters, because during that time, you should know about this is actually Indonesia. They really cut a lot for the plantations in the rubber markets instead of, because they want to change to our palm oil. Because for them, they would think that rubber is really hard to sustain if let's say they want to build for the longer term, because tree for all these trees, right? For the rubber trees, it may take around 5 to 7 years to generate the returns, and it need more work and also need to take more efforts in order to sustain this rubber growth and make the tapping. So it will be more harder for the farmers. They will need to keep giving more efforts on taking care of these rubber plantations. So end up if they change to palm oil, right? Palm oil actually is very easy. Just you have a hot weather, you have some sufficient liquidity. The liquidity, right? That end up actually you still can grow well very quickly. But rubber is not. Rubber you need to take at least 5 years from here. So that's why it take more time consuming, and also lack of labor. They can keep more effort on this. That's why they end up cut a lot on the plantations of the rubber and then change to palm oil. So you can see the tire makers are reducing Indonesia sourcing as natural rubber declines, because like in Indonesia, they also will acquire more imports regarding tire compared to their own self manufacturing the plantations of rubber. So even they lower down a lot of the supply here. So that's why when you compare all this kind of news, right, you can see that currently it's more resilient about the rubber demand, because the demand is still high, but then the supply actually is cut a lot, especially from Indonesians. So you can see during the past 10 years for the Indonesia, right, from 2016 until 2026, actually they dropped a lot for their productions. And then you can see their area actually is cut a lot to only 3 millions for the area hectares here. And also for the productions, right, they cut from 3.4 million, the highest near to 3.8 million ton, and then it actually dropped to 2 million productions, 2 million tons for the productions here. So you can see they cut most likely like 1/3 for the productions here. So that's why you can see there's a significant drop for the productions, especially in Indonesia during the past 10 years. So you can see from this period is the period that farmers are converting their rubber plantations to palm oil, because they see a better returns from the palm oil businesses. So that's why you can see Indonesia end up being more targeting on the biodiesel mandates. They want to build up, utilize their palm oil, how to merge it with the biodiesel with the crude oil. End up they can make it green for the country. For the country at the same time, they can save more costs for this. So let's say if you are interested, like you want to know about the export and import, the relationship between all these buyers and sellers. So you can take a screenshot for this. Is you have the top 3 producer countries, which is Thailand, Indonesia, and also these African countries, and also the Vietnam. And also we have the top 3 consumer countries like China, Saudi Asia, and also the India. So actually, all these producer countries, you can see why Indonesia actually is the second producer from the countries here. So end up you can see if Indonesia's drop a lot in the productions, how significantly it will drop in the supply for the rubber markets. Okay, so next I believe I will talk about the correlation of rubber with other popular commodities futures. Um, I believe some of the points that I have pointed out just now. And then crude oil actually is the US markets is under 9 max exchanges. And actually this is actually under USD settlement. So for your information, maybe you will think that, oh, SICOM TSR20 actually is not really significantly affected by USD settlement, but you don't forget that actually I haven't discussed about the contract specification of rubber futures here. Although this is under Singapore exchange, but actually their settlements still using USD as a settlement. So that's why when crude oil have some impacts on some significant news affecting for crude oil, because of this USD performance, right? Actually end up it will also affecting for our rubber futures in SGX, even though it's Singapore exchange. So for the crude oil market, why it have a significant impact on the rubber market? Because you have this another substitute product. It's called synthetic rubber, as mentioned earlier. So synthetic rubber is made from petroleum based on feedstocks. So actually, it made by crude oil. So it is the raw materials to build the synthetic rubber in order to make this rubber to make more demand in the in for other countries. So that's why if let's say crude oil is affected, then it will actually affected to synthetic rubber. So when the synthetic rubber is being affected, whether the price is more expensive or more cheaper, it will also end up um, affect to our TSR20 rubber futures because let's say if synthetic rubber is more expensive, of course, as a buyers, you will try to buy another substitute product which is TSR20 futures because it is more cheaper. So that's why this is a relationship between the crude oil, synthetic rubber, and also TSR20 rubber futures. So you can look at the chart, right? Because of recent years, actually, you can see the significant growth between the prices from crude oil and also the TSR20 rubber. Because you can see here, they have slowly getting more correlated to each other. You can see when the price of crude oil is increasing, actually the TSR rubber is still increasing at the moment. You can see the moment here. Until March, maybe you have a questions like crude oil suddenly have a significant growth, but the SICOM TSR20 did not really follow with the trend because all these kind of things, like for example, the bomb for the Trump, right? The Strait of Hormuz actually mainly is closing the export for crude oil. So whenever the crude oil is being limited, right, although it seems that the price for SICOM TSR20 maybe will be increasing as well, but actually end up, I would say this is their slightly correlation with each other. You don't think that whether they have a big news today, have a gap out today, or maybe Silicon TSR 20 will also have a gap out today. Actually, it's not because actually crude oil will be really affected more on biodiesel and also the synthetic rubber. So end up actually, if it is really being affected, Sitcom TSR20 will still not really affected by too much because the buyer still can buy the synthetic rubber because we still have stocks, right? If not, it's not affected by crude oil. It's affected by synthetic rubber. So end up the buyer still can buy for synthetic rubber. End up, let's say if the synthetic rubber really being affected, then only it will be really affected aggressively for TSR20 futures here. So this is actually the relationship between them. So when you can see that when crude oil back to normal, then the price for Sicon TSR20 is more correlated to the crude oil here. So the relationship is, let's say the crude oil prices is increasing, then the petroleum or feedstocks cost will be increasing. So when the cost is increasing, the synthetic rubber prices will be increased because it's more expensive, right? Of course, as a buyers, if you buy something is more expensive, you want to sell to another guys, of course you want to sell at a higher price because you want to earn some profit from it. So that's why when the cost is higher, synthetic rubber prices will be higher. So when this is higher, so synthetic rubber is too expensive. Buyers will still buy it or not? Of course, as a buyer, you won't buy it because it's too expensive. Then we will shift the demand to substitute products for the natural rubber TSR20. Then end up the Sitcom TSR20 futures price is increasing. So this is the relationship between the crude oil and Sitcom TSR20 futures. So that's why you can see if you compare to the before the bomb, right? You can see the price is really correlated. When the prices keep increasing, right? Actually, the movement for the Sitcom TSR futures is also increasing at the moment. So you can see the movement is really similar to each other. So as long as the crude oil tension is here, the supply is limited, end up it also will be affected to the prices in Sitcom TSR20. So that's why we still can be more optimistic of the prices in TSR20 rubber futures in the future. And then the next one is the crude palm oil impacts. Crude palm oil is the Malaysia markets futures. And then same because of the Indonesia decisions, as mentioned earlier, Indonesia they shift a lot of their palm oil. They shift a lot of the rubber productions. They change into palm oil industry because they think that in agricultural sector, palm oil can give more cash flow and also can earn more profit from it compared to rubber because as mentioned rubber need to take 5 to 7 years to make the manual harvesting year by year. Then it will be more, it need more labor costs and also need more efforts. So that's why they end up they don't want. They abandon this kind of market. Then they focus more on palm oil instead. So you can see Indonesia now is more heavily focusing on the domestic biodiesel mandates, and it will be announcing quite a lot of policies to support the growth of palm oil instead of rubber. So you can see when they correlate to each other, right? This is the price view for SCPO and SICOM TSR20. So you can see end up the prices actually still similar to each other because all of their demands here, right? You can understand that, let's say Indonesia shift their focus from rubber to palm oil. So of course, the supply for rubber is decreasing because the production is lesser because they are not planting a lot of rubber compared to the past. Then after that, they will have less supply and export. When there's less supply and export, then China and India, their demand still high, right? Because they still want to build their automotive industry. So how they will targeting on this? Then they will still want to buy it because they will still want to make it for the tire manufacturing, right? But supply is lesser because Indonesia is the second producer, as mentioned earlier, right? Because when supply have a significant drop, the demand is still high, then end up the prices for SICOM TSR20 is increasing. So end up you can see the prices for the rubber productions. This is the actually you should understand from the correlation between the productions of palm oil and also the rubber. They end up you can understand their relationship and also to targeting whether the TSR20 futures is increasing or not. So they can see look at the prices here, then to estimate whether the rubber futures is still increasing or not. So as mentioned earlier, we still being optimistic about the prices in the future have a bullish momentum. And I will also talk about the technical analysis and the end of the prices here. So actually, how to make use for SGX website to check on the fact sheet is before that you should know about the role of SGX in global rubber industry. So actually, for our SGX commodities, right? Actually, we have in SGX they have a global pricing benchmark of the natural rubber. They used by tire makers globally to price 75% of raw material. And also, they provide the futures contract as an alternative delivery channel for those market maker, for physical players, for those who manufacturing for natural rubber, right? They still can use these rubber futures to hedge their portfolio in by using our SGX um, SICOM TSR20 futures. And also, we have the presence of many physical rubber players. Buyer and sellers are headquartered in and operates out of the Singapore. So this is the contract specification of TSR20 rubber futures. As mentioned earlier, actually, the settlement is using USD. So the contract size actually is 5 metric tons. The minimum price fluctuation is 0.1 US cents per kg, and value per tick is 5 US dollars. So actually, every movement, every 0.1, you can earn for USD5. This is the trainings, the meaning for the value per tick here. And then the trading hours actually is almost 12 hours for the 1 day session actually from 7:55 a.m. until 6 p.m. and the T plus one will start at 6:15 p.m. until 11 p.m. So at the middle only rest for 15 minutes. Then they will still closing at the same day at 11 p.m. So this is the market's trading hours for rubber futures, and the initial margin now is at USD 957, which is around roughly like 4,000 ringgit Malaysia. So example here, why we say futures is we so-call it is the leverage product because in the TSR20 rubber futures, the price is called TF. Let's say currently the market price at 200 USD. So when you buy USD 200, right? Because for of every one lot of rubber futures, so let's say you buy at 200 USD, you times with 5 metric tons and also divided by 0.1 US cent per kg. So you can see actually you are purchasing 10,000 USD for the value of the shares here. Sorry, of the futures market here. So which means that in initial margin, you just only spend around USD 957, around 1,000, like we call it 1,000, right? Around 1,000 USD, you spend it, but you can trade total value of 10,000 USD here. So you can see you actually are trading 10 times from the actual trading value that you are trading right now with just only 1,000 USD. So that's why we call it leverage in futures market. An example, let's say if you buy the TF at 200 USD, let's say the price move up for USD 0.1, then you earn for $5, as mentioned earlier. Every 0.1 you have earn or you have profit or loss for $5 US here. So let's say the price moved down for $1, then you need to times 10. So that's why you have loss for USD 50. So actually the movement is going by 0.1 like that. So let's say if you really drop for $1 from here for the price movement here, then you can multiply by 10 here. Okay, so this is the contract spec for TSR20 futures. And then you may have a question, so why trade SICOM TSR20 futures? Because as mentioned earlier, RSS is not the current trend right now because all of our demand currently have shifted to TSR20 because as a block, right, for the rubber, it will be more easily to making for manufacturing, for tire, or maybe for other products. But for RSS, it's already being folded in the paper sheets. So it will be more on paper usage. But nowadays we have lesser paper usage right now. So you can compare even in the futures market for RSS3, right? The volume is actually is very low compared to here. You can see the prices here. The volume is really high. Really low, sorry. But compare to TSR20, you can see the volume is keep getting higher and higher, although have some significant drop of that, but we're still getting back for the balancing for the volume here. So you can see the price end up is getting back from here. The volume is high. And this is the market depth of SICOM TSR20 futures. So you can see compared to the RSS3, right? In TSR20 futures, we still can get more value and more open interest from here. So you can see end up we can still maintain with the total volume here. This is the total volume. This is the total open interest here. So end up we still can get more and more volume in the futures, and you have the liquidity, then you can start trading with the TSR20 rubber futures because of the market depth here, right? You can have open interest for 12 months, which is a lot. And then so the hedges can choose the actual contract month to hedge their exposures in the future, for example. And then the spread traders, they can also trade the price differences between the different contract months here. They also can trade spread. So it's very convenient for the traders. Let's say they want to trade and targeting to trade in the TSR20 futures here. And then compared to all other exchanges who offering for SICOM TSR20, maybe you have a question, so why we should choose SGX as your exchange to start trading? Because for example, China and Japan also offering TSR20 futures, right? But in our SGX, right, um, we are more dominant in SGX because all their dominant offshore market shares actually they have around 95% in terms of both volume and open interest. So you can see can see the earlier, right? Actually we have 95%, we have higher open interest compared to other exchanges. So we have more exposure compared to other exchanges. So that's why if you really want to look at the TSR20 futures, why not just look at in SGX markets that we have actually offering TSR20 proper futures for you to start tradings. And it will be more and having the higher liquidity for you to trade on it, then you don't need to maybe concerned or worry about you are unable to exit off the market level. For example, you want to trade, you want to buy, and after that you want to sell it. Actually, for you, it's very easy to sell off your positions. Let's say if you want to um, liquidate your positions, for example, because the demand is there. And then especially that we have physical settlement, as mentioned earlier in our SGX also. In SGX, they also offering physical settlement. They also build with this services for you guys, for especially for those physical players to handling from it. So end up, this is the summary why Singapore and SGX SICOM TSR futures for you to choose, and especially you want to trade in the market because although it's under SGX, but we still denominated in USD. And also we have a lot of producer, tire makers, processors, which is the physical players are trading with SGX about the TSR20 futures. And also TSR become the choice of rubber product, also physical dealers. As mentioned, RSS is lesser demand compared to the past. And also we have strong recognized risk management structure, and also the trading hours that span over active periods for rubber as well. And then there's no vested interest in buyers or sellers here. Okay, so we still have 10 more minutes. Let me go through our technical analysis very briefly about on this because sorry, I taught a lot of news because I believe fundamentals is really important for you guys to understand whether you should how to start with the rubber markets, because if you don't know what rubber market, what the demand and supply coming from, then actually you still don't know how to start trading with it. So at least you need to understand what is the features of rubber futures, then only you can slowly getting dig inside to these markets to understand more in the technical analysis. So for me, right, because end up in trading this kind of high liquidity level of products, we still need to look at the trend. So for me, my favorite is using Hekinashi instead of candlesticks because in Hekinashi, right, you don't need to look at any of the potential gap when market open or maybe maybe market close lah. So you don't need to really afraid of this because the price will still lining up to each other and telling you about whether the price is having the continuously trend or bullish or bearish momentum. So for example here, there's no upper shadow, which is there's no wick for the red candles, right? From for this meaning that actually this is meaning that the bearish momentum is keep continuing. So until the next candle, you can see there's something. I mean, the wick is coming up, meaning that they might break off another structure and might tend to another reversal trend. So for example, at the front right, you can see the green candles here. There's no wick at the bottom. So let's say the prices keep continuing for the bullish structure. Then after that, they have another next candles is having, I mean, they close the market with the wick, meaning that currently it might have another reversal trend. So end up, you can see it is very easily for you to justify whether the market is actually on bullish or bearish momentum here. So as mentioned, you need to look at the wick, whether the trend is continuing for a strong trend or not a strong trend. So let's say if they have the wick, meaning that they're actually slowing down their momentum compared to the past. Especially, let's say if you look at the body here, let's say the candles with the lower body, with the lesser body, but with a longer wick, meaning that currently we have a strong reversal trend. So as mentioned, you can see, for example, here, you can see there's another wick here, right? There's almost nobody here. Nobody, meaning that the reversal will be very strong. After that, you can see there's a green candle is telling you that, oh, the bullish momentum is coming soon. So this is the real life example of Heikin-Ashi dynamics on TSR20 futures. So let's say if you see the market is keep continuing, right? For example, you can see this hollow candles, there is nobody here. So you can see there's a very strong reversal trend. After that, you can see very strong. It will be straight, having a bullish momentum here. And after that, you can see another hollow candles here, right? Meaning that currently the market is having selling pressure now. Although the price is still coming up a little bit, but it is actually maintained with not a stable prices here because you can see the candles is all having the wick. Only two candles without the wick. So end up the price still going for the bearish momentum after that. So this is how you can look at the price, whether have reversal trend or having a very strong bullish or bearish momentum here. Next, we call it MACD, moving average convergence divergence. Actually, this MACD is very suitable when you mix with this Heikin-Ashi tool because Heikin-Ashi is telling you about the structure, the market structure, the buying and selling pressure, right? But if you use MACD together, you can also targeting. I mean, the MACD also telling you about the buying and selling pressure, whether currently the volume is high or no. So that's why for this MACD line, only you need to know is whether the signal line is increasing here. So let's say if you look at the MACD line, it's actually cross above the signal line, actually slightly like EMA, then actually telling that currently the recovery for bullish momentum is coming soon. So let's say you can see the histogram is at above zero, meaning that currently buying momentum is very strong. So end up you can see at this zone, actually normally the price will be increasing. So for example, if you look at the MACD directly from here, right? Histogram above zero, and then the MACD line above the signal line cross above. Must look at the cross above, then end up the price is having a strong bullish momentum. So let's say if they cross below, then that you can see MACD line cross below at the signal, meaning that currently the buying momentum is weakening. So end up you can see the volume is drop below than the zero line. If drop below the zero line, then you can confirm they will have a bearish momentum. So that's why you can see end up the price going down. So very easy, right? So this is how we can look at the MACD. If you compare to the Heikin-Ashi chart, it will be more easily for you to justify whether the price currently having a strong or weaker buying or selling momentum here. So end up how to set up for your entry, right? So for entry, I would always suggest for Fibonacci retracement because Fibonacci retracement is also something like the support and resistance. Then I believe this is also one of the patterns that you can use. And let's say if you have something, the price is very volatile at the zone. So for example, only you need to know is the key zone. So key zone one actually is from 0.236 to 0.382. We call it percentage, like 23%, 38%. Or the key zone, another key zone is at 61.8% to 78.6%. So you can just treat it like a support and resistance, but the most importantly, actually, as the 61.8% here, this is the best retracement prices. So normally when the price actually they hit this 61.8, for sure, let's say for example the price dropping, right? It hit this stage. Normally only, yeah. Normally the price will have a reversal trend to 78.6 first, at least, then before drop another strong bearish momentum. So that's why it is a strong retracement. We call it retracement, strong retracement, because for all the prices that hit for 61.8%, normally they will have make a reversal trend. Normally. So how do you apply Fibonacci in the chart, right? So for example, let's say if you look at the chart currently, it have a very strong candles, right? For example, here you want to guess for the next momentum here. Then you draw the Fibonacci here. You look at the key zone as mentioned earlier. These two key zone during this period, right? You can see the price actually is going down and almost hit the 61.8%, right? So when they hit this 61.8%, you can see the price also with the shadow. So currently the price end up they going up and down again. So how does it work? Because you can see, as mentioned, right, they hit the price of the ladder here. Actually, initially when they hit these prices, they drop back again. So after they another breaks through the structure, they hit the 78.6%. They hit the resistance, right? They hit the resistance but fail to close at above 78.6% here. So end up the price when he hit the resistance here, end up it dropped a lot during this period. So end up this is how you can apply Fibonacci chart here. You can see the price have a reversal trend right now. Okay, so you can see the prices, all you can see is from here. So let's say if you look at the prices here, then this is the zero prices that you can look at for the last reversal trend. So let's say when the price hit below than that, then you can see the price maybe we have a reversal trend after that. Unless they really break and close below than the prices, then you can see the price maybe have another strong bearish momentum. So end up how you can justify the candles, right? Maybe you have a question on this. You need to look at the body when you apply with Heikin actually, like the body must within the range when they close. You don't look at the wick whether if you're going through to break the structure or not. You look at the body itself. If the body close inside the range, then the price still valid for the structure. For this Fibo structure here. Oh, sorry. Maybe you have a question how you draw the Fibonacci, right? Normally, you will draw from the highest candles, highest wick to the lowest wick from the reason. Let's say if you want to compare. Of course, let's say if you think that you want to compare with a short-term time or period, you want to compare from this until this range also can. It's up to you whether you want to make it bigger trend or lower trend. Of course, when you look at lower trends, the price range, for a TP of a stop loss, of course, will be lesser. So it's compared on your strategy, whether you want to compare from what price to what prices. Okay, so this is the current market trend structure right now. So if you compare, sorry, I also use another called Bollinger Band. So I didn't really explain a lot for this because let's say if you look at Bollinger Band, actually it's also another technical structure there for you to look at the buying and selling pressure. So end up when you see the green candles, right? Normally, let's say if the green candles is still aligned with the top of the line here, then the bullish momentum is still ongoing. So when let's say the price have a reversal trend, it's not aligned with the top, meaning that they have a reversal trend soon. So let's say you can see at the same time, let's say if have a bearish momentum, right? The price, the red candles normally will be aligned with the bottom line as well. So end up the price is like that. So you can see currently at the last prices here, the bullish momentum is still optimistic because the green candle still here. You can see the MACD line. The MACD line is still above the signal line after they cross, and then the volume still above the zero, and also the Bollinger Band still aligned with the green candles here. So that's why you can see currently the market structure we still can think that it is optimistic for the current price structure in TSR20 futures. We still can look for another bullish momentum for me, at least. So this is the point. I make it become. I just zoom it just for your references. You can see still aligned with the green candles here, and then Hekinashi is still showing the continuous trend right now. Currently, you can see there's no wick at here. So end up all of the scenario telling you that bullish structure is still ongoing. So for Q3 and Q4 price outlook, will Rubble look for another strong bull trend? For me, I think yes, because of in fundamental, as we showed that just now, the supply concern, right? Actually, the production is still decreasing a lot from the past few years until today, and then the demand is still high. So we still can, in fundamental side, we still can look for another bullish momentum. At the same time, in the chart as well, we can see that the current market structure is still having the price recovery, and then the bullish momentum is still ongoing. And then this is the key zone. Actually, is the prices that, I mean, the key resistance. Because of what? Because this key resistance actually I bring from the previous high, from the previous high. Because currently we have the higher price. Maybe it will be very hard for you because the previous high actually is from, if I'm not mistaken, is around 2017 or 18. It's quite long time ago. So that's why when the price hit the not a historical high, but at least in these 5 years, the highest from within these 5 years, then you should look at the previous high, even though it's for many years ago. At least you can have some things for your references when you want to apply with this Fibonacci retracement tool. So that's why this is the key resistance here. And then we can see the candles actually they close above than the key zone. So that's why we still can expect the price can grow up at least to 244 for this year, or maybe above than that for the prices. So we can see whether the price can break above 244, then we can only understand whether the price can hit for higher or not. So this will be the key zone for the weekly chart here. And then, as mentioned, the major resistance for 100 and 155.8 here actually still hold. I don't think in the short term the price can drop back to this range, lah, to be honest, because it is really hard unless they're telling you that currently China don't want to make any of the manufacturing right now, the demand is lesser, or unless Indonesia suddenly telling you that, oh, I want to replanting the rubble, unless there's nothing else can break, can, I mean, there's no other news can support with this kind of quick drop. Let's say the price dropping at here. So the major resistance still hold, and then the resistance is retesting at this 225.9 here. So they break above here, then we still need to see whether the price can keep going and become higher than this yellow box, the yellow zone. So you can see, okay, this major resistance I show you actually is at the year of 2017. So the previous high actually is around 9 years ago, quite long time already. Then the bullish recovery seems mistakes, and also you can see the price keep going with the higher high and higher low pattern. This kind of a chart pattern I didn't really explain all this, but actually this is about this. Like for example, the higher candles is still closing at the higher candles, and then the lower candles still um, having the higher candles. So meaning that currently the drop, right? They haven't dropped the previous low, and then the higher still getting the higher and break to the previous high. So that's why we can see this is a higher high and higher low pattern. So meaning that the bullish momentum is still strong during this period. And then the price is expected for me to grow at least until 225.9, which is above the yellow zone. And also it might be possible to pull back again to 210.9, which is around at the 0.5% of the zone here. Let's say if really have a pullback, it will still drop back to this support zone, which is at 0.5% here. And then, of course, it won't break below than this red candles because it want to make it for the continuously for the bullish trend now. So end up when they drop back to here, the recovery zone. After that, they will have another bullish momentum at least until 245 USD. This is my view. So we dig. Let's say if we dig into the daily chart here, same zone. This is the same zone. Just we make it become clearer with the daily chart in the momentum here. So you can see currently the price still having the higher high and lower low. Higher high and higher low patterns because they didn't. I mean, they never close. The red candles never close below than the previous one. But then the green candles is keep getting higher and higher compared to the previous high. So end up, this will be the best flag for you to have a notice on it because this is the bullish flag candles, and then it have break the key resistance here. So end up, I believe the price will grow at least to 244, which is at 78.6% here. This is the resistance. So the bull flag is a ascending triangle pattern. I tell you already formed. Then the price will retest at least this zone, at least they need to close above than the yellow zone. Then we can confirm with the bullish recovery here. So else, if you also compare, I mean, let's say if it drop, I believe if you drop above than the 61% 225, because as mentioned earlier, 61.8% here is always the retracement prices for you to make a reversal trend. As long as they retested for 2 times, if let's say this time they still keep the 61.8%, we believe that the price can have a recovery and have a reversal after they hit this zone. So if let's say they fail to break over, the price will be testing at the 50% here. This is the line here at around 210, which is about the prices here. But it still must close above than the previous low in order to make sure the bullish momentum is still continuing. So end up, this is the price view for the chart here. So not sure whether you want to take a screenshot. I spend another 3 seconds for you guys to take a screenshot for this. This is my view for the prices here. And we believe currently we have a bullish momentum on this. All right. So actually, this is at the end of the sharing today, and hopefully, if you have any questions that you want to ask for more information, then you can just open an account with us. And this also don't forget you have the welcome report for this. And now, before I ending, let me have a Q&A sessions for today's sessions. Let's say if any questions, then please ask me in the chat box. Okay, so look at the questions. What is the trading and commissions fees for TSR 20? So let's say if you want to trade with the TSR 20 futures, it depends on the product itself. Let's say if you want to ask for more for this, you can ask for our dealer itself. Then we will PM you with the prices here because we not disclose publicly from here. Okay. So let's say if you have any questions, then you can get my name card. And then later I will also show my office number. You can just call in maybe on tomorrow. Then we will have someone to assist you on this. And the second question is about what is the best chart time frame for TSR 20 tradings? Oh, quite a lot of questions. And then which one is the better day trade or swing position tradings? How much approximately of the fees around turn? So for your third question for the fees, right? As mentioned, we won't disclose in the webinar right now here. But let's say if you want to ask for more information, then just ask in in PM us and call our office. Then we will assist you on this. And then what is the TSR 20 active month? Basically, it's not the current month, but basically we trade actually is for the 3 months later. Same with CPO for almost all the commodities, right? Actually, the active month is actually 2 months later, 3 months later, like that. So currently, if you compare like that, it's November for the active month. But then let's say if you want to ask for the best chart time frame, for me, I like to look at daily chart because daily chart we always can see on the weekly trend whether currently in this week whether we have a bullish or bearish momentum before you go in deeply for your day trainings. So you look at the daily chart first, then only you look at, for me, I like to look at 30-minute chart because 30-minute charts for intraday the prices will be more stable, especially if you look at the Heikin Nashi chart. You need to have the stable momentum for the prices view here. So that's why in 30 minutes, you can see there's no, for example, like if you look at 1 minute chart, it will be unstable because the price might have a fake, we say the structure here because some physical players, we never know what is their move. Let's say they want to trade on this. So in 30 minutes, at least we can look at the candles in this 30 minutes is more confirmed compared to the 1 minute. So that's why 30 minutes is more stable. For example, if you look at 30 minutes chart here, mostly you can see another chart patterns in your time frame. So for me, I suggesting for 30 minutes for the time frame. While for your questions, is it better for day trade or swing position tradings? Actually, it depends on your strategy. Because let's say if you look at lower time frame like 15 minutes, you still can trade with the Fibonacci retracement because the Fibonacci is based on your price range here. Let's say if you look at 15 minutes, right, you compare with the lower time frame, actually can get the lower TP and stop loss. So end up you still can earn something from the Fibonacci retracement here, as long as you use the strategy, right? So let's say if you can see my chart just now as I show you, is a daily time frame. Daily time frame is telling you about the overall like this week the market structure. So I believe these 2 weeks the market will grow to at least the 78.6%, which is at $244. That's why you can see for swing you can use Fibonacci, but if you use day trading as well, you still can trade with that because it is more safe compared to Cropama because Cropama is too volatile with the gap. But if you compare to Rubble, the gap I think is lesser compared to CPO. It's more stable, especially if you look at Hikinashi, you no need to look at the gap. Then you don't worry for this. Okay, so I believe that's all for the questions today. So let's say if you really have some more questions, then you can just feel free to let us know. And then, sorry, let me share my screen again. I want to show you our office number. So let's say if you have any questions, you can just feel free to contact us and then follow us our Instagram or whatever. So this is my branch. And then also our branch email pckd@philipcapital.com.my, and then our phone number 0392122820. So let's say if you have any further questions, you can just feel free to call into our branches. Then we will happily to assist you. Let's say if you have any questions, right? Let's say if you're from other branches, this you can take a screenshot as well. Then you can call in to all these branches for more informations. Okay, let's have another 3 seconds. All right. So that's all for today's sessions, and thank you for tonight joining for our Rabu webinar. Let's say if you have any further question, again, please ask your licensed dealer, and then we will happily assist you. Let's say if you have any questions and also problem with this. So thank you for joining tonight, and yeah, good night today. Bye bye. Thank you.